the first question, when I used to come to Singapore 7 or 8 years ago, maybe a bit longer, and I'd go around and see investors, and I'd have to explain what living sectors is. I'd have to explain to them why they might want to buy a building like that. And nowadays we'll go into a meeting and I don't need to explain that at all. And often it's the first question they ask. What about living sectors? What about student, multifamily? Where are the hot markets and so forth? What do you think? And this is the question, Emily. What do you think has driven that change? What's driven the demand amongst the investor group that you deal with for these sectors?
Yeah, that's interesting. What you're saying totally resonates. I moved out to Singapore almost 9 years ago now. And previous to that, I was working, as you know, in the student accommodation team in the UK. So I came out talking all about student accommodation and had to explain exactly what it was. And it's only really recently, I suppose, in the last 5 years, but really in the last 18 months, that the conversation has become really, really regular. And I'd say now most of our time in meetings it comes up. Can we talk about BTR in UK? Can we talk about student accommodation? What about in Australia? What about US? So the shift has been gradual, but really kicked up in the last 18 months. And I think it's that resilience of and the granularity of the income that's really appealing. I think it's that the investors in this region are becoming increasingly global. So they're realizing that they want to diversify across asset classes and across regions. And there is a slight copying their peers, a slight herd mentality from investors in this region as well. So we've seen the Singaporean government-linked companies, for example, make huge inroads into living sectors in the US, UK, Europe, and in Asia Pacific as well. So I think when we see sovereign and government-linked companies really forging ahead into the sector, that's when we start to see other investors following as well. But it's certainly been an education process. I feel like in the next 5 years, we're going to see an even further progression in terms of the amount of investors coming into the sector. In terms of where they're really focused at the moment, UK is certainly the top market. I think that's the familiarity of the market and the depth of opportunities there. But US also garnering increasing attention, and Australia as well as that market develops.
I've been at Knight Frank now for 25 years, and over that time I've seen a few cycles. And what I've seen is that the Asian investors are incredibly savvy, and they're often first in, and they're taking advantage of a price correction. And we're beginning to see a little more interest coming in from Asia for the UK, as you've just identified, and also for Europe. Do you think that's the savvy, intelligent, opportunistic nature of the investors that you talk to? Are they seeing it as an advantageous time to come into the market? It's cheaper than it was. It's cheaper than it's going to be. They're buying in the dip. What are your thoughts?
I agree that there's a view that it's a good buying opportunity now, that there's yields have softened a little bit. So yeah, that they're always looking for chasing that higher yield. But I think part of it is that so in the last since the GFC and in the top of the peak of the market, deals were completing in very, very quick timescales. With domestic investors being very, very competitive, it's difficult for overseas investors to compete in that kind of market. We're in different time zones. They might not necessarily have boots on the ground. So really being competitive with that domestic capital was very difficult. So I think now there is a gap. There is a price softening. There is currency to think about as well. That's looking attractive. And also these investors can often source cheaper debt in their own markets and so can be competitive in that basis as well.
And Emily, with a lot of investors, particularly from Europe and the US, they might categorize their capital as opportunistic, seeking kind of 18 to 20% returns, or core plus, which might be kind of early teens, and then core, maybe high single figures, something like that. How would you characterize the predominant capital that you see in your markets in Asia?
Yeah, I think there's a real spread of different categories throughout the region. I think that's why it's such a fascinating place to be working in and advising this capital. You know, I suppose you've got the sovereign wealth and government linked companies that more core capital and are able to buy into sort of core large platform type opportunities and in the opcos as well. And then you've got the more sort of core plus, maybe the developers, the Singaporean REITs, the private capital that's looking into that sort of more mid-teen return. But no, there's a huge wealth of and spread of investor appetite across the different categories.
And Emily, obviously the interest there for assets here in the UK, and obviously we're seeing it for America as well, and for certain places in Europe. Are they turning their attention inward? Are they turning their attention to their own cities, looking at living sectors domestically? And if so, where do you think the hotspots might be over the next 5 to 10 years?
Interestingly, was in a meeting in Malaysia, and the investor I was meeting was saying what we want to do is invest into a mature living sector in the Western market, learn the market, learn how to operate it with an experienced partner, and then bring those learnings back to our own country in the next decade when the evolution is a bit more progressed in that country. So I think that's perhaps what a lot of the government companies have in their thought process. So I think at the moment it's early stages for a lot of countries within the region. The outliers would certainly be Japan, which is a very mature and institutionalized market, and Japanese investors are very, very active domestically. For Australia, which is probably the next kind of largest opportunity and most progressed in growth, it's really been dominated by foreign capital so far as opposed to domestic capital. The value of the Australian market is around 17 billion at the moment, and 12 billion of that we can attribute to foreign capital partnering with local developers. So really a foreign marketplace at the moment. And I think domestic capital there is waiting kind of for proof of concept until really they make a big play in that sector.
Emily, touching on Australia, what we're seeing over here with Australian capital is we're seeing the Australian superannuation funds coming in, for example, the Aware Super investment into Get Living, and we're seeing Australian Super also looking at a few different things. Do you think that we'll see more of that coming over here? And do you think that in due course those superannuation funds will invest in Australia in the same way?
Yeah, absolutely. We've seen with superannuation funds, a lot of them merging to create these huge mega funds. And so they have an enormous amount of capital to deploy. A lot of that can't be placed just domestically, so they've had to invest overseas. So the first port of call has seemed to be living sectors, large scale platforms, investing into the opcos. So absolutely expect to see that trend continuing. UK being the major market as well as US. In terms of their focus domestically, we've already seen AusSuper and others starting to look at and partner up with local developers. So yes, I expect that will happen more once the market develops and grows in Australia.
Emily, I know that Dori Nolan and the Berkadia team were over with you over the last couple of weeks, going around seeing investors and talking about capital, obviously, from there going into America. What were your big takeaways from those meetings that you had?
Yeah, firstly, it was great to have the Berkadia team here. We did about 2.5 days in Singapore, 2.5 days in Hong Kong, and a load of investor meetings, and it was fantastic. I was with them mainly for the Singapore part of the trip, and we met investors from the government-linked companies to smaller privates to listed developers. And the major theme in each meeting, or the major topic of conversation, was student accommodation. And I think what drove sort of interest from these investors more into student as opposed to other living sectors was really high yield. So that was really interesting to see. And we've got some great live discussions going on with many groups and groups making trips over. So I think that's where we'll see the main route of capital from Singapore to US is into the student market over the next 18 months.
Emily, that's great. Thank you so much for your time. I really appreciate it. I know that it's late there.
No problem.